SPY and VOO are two of the most popular ETFs on the market today, but there are a few differences between SPY and VOO, and mainly those differences are going to be expense ratio, liquidity, but we also have some differences in top 10 holdings and some other amazing things that we are going to talk about today. So I am really excited to break this down, and today we are going to dive into SPY versus VOO. Now, before we dive in, I want to talk through some of the main points here when we look at these two ETFs. And the first thing we're going to look at is the difference between the index tracked on SPY and VOO. So they both obviously track the S&P 500. So we are comparing apples to apples when we look at the assets that they are tracking. Now, the fund manager is going to be different. SPY is State Street Global Advisors, a massive company. And then VOO is one of my favorite companies of all time, which is Vanguard. And Vanguard was founded by Jack Bogle, the founder of index funds, and so this is a great one to look at. Now, assets under management, SPY has the edge here, where they have more assets under management, $408.44 billion, whereas VOO, we are looking at $296.3 billion. Obviously, these are two U.S. currencies. They are tracking U.S. companies, and the dividend distribution is going to be distributing. It's going to come out quarterly. We'll talk more about that later. And the expense ratio for each, and this is a big differentiator, is SPY is 0.09%, whereas VOO is 0.03% for products that are trying to do the same exact thing. Now, SPY was launched in January of 1993 by State Street Global Advisors ETF, and so it is the older of the two funds because VOO is actually launched back in 2010. So SPY is the older statesman when it comes to these comparisons, but VOO has really gained in popularity over the last couple of years because Vanguard has a very strong hold on the index fund market, mainly because of Jack Bogle, and it's a very trustworthy company. This is something where Vanguard is really accelerating its path in ETFs, even though some of its ETFs are newer. They're older than most ETFs, but they are newer than some of these OGs like SPY. Now, what do these two funds track? They track the S&P 500, and if you don't know what the S&P 500 is, it is a little over 500 of the largest stocks in the U.S. stock market. And you're going to be thinking about some of these major, big, giant companies in the U.S. They are most likely in the S&P 500. Now, the beautiful thing about investing in the S&P 500 is that if there is a company struggling within those 500 companies, it drops off, and the S&P adds another company who is actually doing well. So this is a meritocracy when it comes to being in the S&P 500, which is why it's a great thing to look at investing in, because this is a well-diversified fund with a lot of different assets that can help you in the long run if you are a long-term investor. Now let's look at the top 10 holdings between SPY and VOO, and I tried to put them side by side here so that you could see the differential. So top 10 holdings for SPY are going to be Apple at 7.45%, Microsoft Corporation at 6.98%, Amazon, which is 3.05%, Nvidia, which is 2.82%, Alphabet, 2.01%, Tesla, 1.85%, Alphabet Class C, which is Google Class C shares, 1.76%, Meta Platforms, which is 1.69%. Then we have Berkshire Hathaway, which is Warren Buffett's company, 1.65%, and ExxonMobil, 1.17%. So you're going to see a differential from SPY to VOO, because let's look at VOO right now. So VOO has Apple at 7.5%, a little bit of a higher weight, as you see, than SPY. Microsoft, 6.96%. Then we have Amazon at 3.06%. Then we're going at Nvidia, 2.65%, so a little bit of a lower allocation on Nvidia. Then we have Alphabet Class A, 2.08%, and Alphabet Class C, 1.82%. So this actually, Alphabet Class C, is going to come ahead of Tesla on this top 10 holdings for VOO. Then we have Meta, which is 1.68%. Berkshire Hathaway, which is Warren Buffett's company, at 1.65%. We have Tesla farther back at number 9, which is 1.56%. And the differentiator between VOO and SPY is United Healthcare. So SPY holds ExxonMobil Corporation at 1.17% currently. These always change, remember that. And United Healthcare holds 1.3% in VOO. So these are always going to change. I would check for it currently if you are looking at this way into the future. At the time recording this is where they are. And so you want to make sure that you understand what these top 10 holdings are, because if there's one that you like more than the other, that could also be a differentiator for why you invest in that company. If they have a history of buying additional companies in the top 10 holdings, that would be companies that you are more allocated and weighted towards. Now, Exxon for VOO, for example, is probably going to be 11 or 12, whereas if you look at the same thing for SPY, United Healthcare is going to be in that top 10. They just kind of move around slightly as they make adjustments. Now, distribution. Distribution is is kind of when your dividends are going to be coming out and a couple of other things. So both ETFs, SPY and VOO, actually are distributing ETFs, meaning that they give you regular dividend payments quarterly. So your dividend payments are going to come out quarterly. The best thing to do for a lot of ETFs is just reinvest those dividends back into the ETF, and then you have a compounding machine starting there. As your ETF either appreciates or it can go down in value, those dividends are just going to be reinvesting, buying you more fractional shares, and over time that snowball begins to grow, and that is really how you can compound and accelerate your compounding over time. You always want to reinvest those dividends when they come in, especially if you are a long-term investor. Now, let's look at performance between the two of these, because performance is going to be a major factor as you look at some of these funds. So the first one we are going to look at is SPY, and we'll compare it to VOO. So the 1-year return between the two, SPY negative 7.82%, VOO negative 7.77%. But now let's look at the longer term returns, because we don't care about 1 year and less. We care about longer term returns. So the 3-year returns for both, 18.45% for SPY and 18.56% for VOO. The 5-year returns, SPY is down a little bit from VOO, 11.04%, and VOO is 11.15%. And if you look at the difference for SPY, 12.10% and 12.20%. So the index overall has returned 12.24%, as you can see the differential here. And so these are tracking very closely to the index. They are completely fine on how close they track to the index, but VOO is edging out SPY over the last 10 years. You can look at it in each and every single return rate. VOO is actually edging out SPY. So two factors we're looking at already here as we do this analysis is that we see that VOO has a lower expense ratio, meaning the expenses are lower, and it's edging out SPY on total returns historically. Now, in the future, that could completely change. Nobody knows what's going to happen in the future, but at the time I'm recording this, SPY is actually having lower performing returns than VOO does. Now, let's look at this sector diversification, if this is something you're interested in. Some of you viewers are definitely interested in sector diversification, so I want you to kind of take a look here. We have information technology. These are going to be really, really close. For each one, it's going to be about 28%. Healthcare is about 13%. Financials, 12%. Consumer discretionary is going to be about 10%. Communication, 8%. Industrials, 8%. Consumer staples are at 6%. Energy is at 4%. We have utilities at 2%. We have materials at 2%, and real estate at 2%. So these are tracking very closely. And I like to see that because you want that sector allocation to be as close as possible so that you know that these funds are actually tracking the exact same thing as we look through this. Now, which brokerages would I consider if I want to buy these funds? The beautiful thing is that these are both ETFs. So because they are both ETFs, you can actually buy these funds pretty much anywhere that will allocate ETFs. This is not like an index fund where if you go to Fidelity and you try to buy a Vanguard index fund, you're going to be paying additional fees. That is one of the more frustrating things that can come up depending on what brokerage you're at. When it comes to ETFs and buying S&P 500 ETFs, you should not be paying fees in your brokerage account. You should not have additional fees. So looking at this, you can look at Vanguard is a great one, obviously, for both of these. Fidelity is a phenomenal one for both of these. We have Schwab is phenomenal. M1 Finance is also a great one. So you can look at those 4 allocations. The difference is if you are interested in index funds, M1 Finance does not have those, but the other 3 do. So the other 3, if you're going to invest in index funds, you want to go to the parent brokerage that you want to invest in those index funds. So if you're interested in Vanguard index funds, for example, you want to go out and go to Vanguard index funds. But with ETFs, you have a lot more flexibility, which is one key point to ETFs, and why I love them is you have flexibility because they trade like a stock. You can get instant liquidity if you truly need to. And in addition, when it comes to ETFs, they have a lot of diversification, and for a lot of funds, they have lower expense ratios. So VOO is fantastic because VOO actually has a lower expense ratio than its parent index fund, Admiral shares. So that is another thing to consider as you go through this. Now, which one would I choose out of these two? Well, because of the 2 reasons. Because VOO has a lower expense ratio, and because VOO actually has had historically higher returns, even though they're slightly higher, they're 0.1%. They are still higher returns than SPY. Why not take advantage of those 2 things where I'm saving money? So really, you're banking on getting an extra couple basis points here. Really, you're getting an extra couple basis points here. Why not take those couple basis points if you can? So my personal pick would be VOO, but you may want something different like SPY because you're interested in liquidity, or maybe you like that historically it is an older fund. There's a lot of different reasons to choose SPY, but my 2 are always going to be cost-based and they're going to be return-based. So for me, that is why I'm choosing that one. Now, that return-based could change, obviously, in the future. Nobody has a crystal ball. Nobody knows what's going to happen in the future, but that is how I would look at these two funds and how I would choose out of these two funds is my personal pick is VOO. Plus, I just love Vanguard funds. Listen, I hope you guys learned a ton about the difference between SPY and VOO. If you guys have any questions, make sure to leave them down in the comments below. And if you're interested in investing in index funds and ETFs, we have a course called Index Fund Pro that teaches you exactly how to do that. It is always linked up down below so you can check that out as well. We make it as affordable as possible for you. I walk you through step by step on exactly how to do that. Listen, I appreciate each and every single one of you watching this video. Don't forget to like, subscribe, hit that notification bell as well, and we will see you on the next video.